Hello and welcome to this session in which we will discuss disclosure and reconciliation when it comes to fair value accounting. Now, it's very important that you understand the fair value of financial and the fair value of non-financial assets and the financial liabilities. If you are not comfortable with those concepts, please look at the prior two sessions. In this session, we would look at the disclosure. What companies need to disclose, need to tell the users about their fair value computation. If you remember, in fair value, we have three levels: level 1, level 2, and level 3. Level 3. Companies must disclose the level within the hierarchy at which fair value was determined. Which fair value hierarchy did we determine? Also, we must provide a reconciliation schedule to show the beginning and ending fair value of level 2 and level 3. And obviously, especially level 3, because level 3, there's a lot of computation, a lot of judgment, a lot of estimates by the company. So we need to know as much as possible, especially for level 3. And why are we doing all of this? Because we want to help the users of financial statements, investors, creditors, to be able to understand our fair value assumptions, our forecast. They may disagree with us. That's fine. As long as the auditor agrees, that's all what we need. But the users may disagree. The users might make a different assumption, or at least the users need to know, how did you come up with this number? And decide whether they are comfortable with this number or not. And this is what we will do in this session. What is required to be disclosed? Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. The first thing is the hierarchy level. I already mentioned this. You need to disclose the fair value of the asset and liabilities by level within the fair value hierarchy, level 1, 2, and 3. And if you don't know what these are, you want to make sure you go back and view the fair value 3 levels. When it comes to level 3, for assets and liabilities that fall within level 3, a reconciliation from the beginning to the ending balance showing changes during the period. So we have to show, why did the fair value change? Is it because of gains, losses, anything that's reported on the income statement? Any purchases? Did we bought more assets? Did we sell any of these assets? Did we settle any liabilities? We need to know the specific details. Did we transfer any assets from level 2 to level 3 or from level 3 to level 2? We need to know about this as well. Any judgment and estimates about our future cash flows. Also, which valuation techniques / inputs did we use? Description of that valuation technique. For example, is it market value? Is it cost? How did we find out our valuation technique? If there has been any changes in the techniques or input, we need to also disclose this. And as I mentioned, any transfer between the various level and the reason for the transfer. Information about the amount and reasons for transfer between level 1, 2, and the timing of such transfer. Maybe we did not have observable quoted data. Now we do have, so we moved from level 2 to level 1, or it could be at the opposite where we had direct quotes, then that asset is removed from the market. Now we have to go back to level 2. What else do we need to disclose is any information that we used from third parties. If third-party pricing services are used, where did we get our information from? Sometimes we don't generate it internally. Sometimes we might obtain this assumption, the growth in the industry, maybe the discount rate that we are using, methods, assumptions. If third parties, we need to disclose. If we are using third parties, also as a user of the financial statement, I need to know, how did you come up with this? Did you come up with these numbers on your own, or did you use a third party? Now I have to look at that third party. Do I trust that third party? How credible it is? So on and so forth. Also, you need to perform what's called sensitivity analysis, especially for level 3. You have to kind of give a description of the sensitivity of fair value to changes in the unobservable input. Let's assume you are using interest rate. What happens if interest rate changes? This can highlight how a change in a particular input, let's assume an interest rate, will change in the value measurement. So for example, if interest rate goes down 2%, what happened to your financial asset or financial liabilities? Does it go down by 2 or does it go down by 8? If interest rate went up 2%, would your asset go up by 8, 7, 6, 2? Is it linear, not linear, directly related? Show me some sensitivity analysis so I can basically make my own judgment as well. For non-financial assets and liabilities, which we had a separate recording about this, disclose information that are, disclosure about non-financial assets and liability that are unfrequently sold or not measured at fair value, but are required to be disclosed. Just tell me a little bit more about this. Again, we don't have to worry about this when it comes to US GAAP. Other things about fair value, if the fair value option was chosen, and if you don't know what the fair value option, it's an option. You have the option to report something at fair value or at something else, maybe the equity method, maybe cost. But if you choose to report that fair value, if that's the case, then additional disclosure. Why did you elect this? Because once you elect this, you can back out of it. And the difference between the fair value and the contractual cash flow of that financial asset and liabilities. If you have derivatives, net the derivatives, disclosure about netting the derivatives and the liabilities and the corresponding net exposure effect on the balance sheet. You have to tell me, how did you come up with that netting? Because sometime you might have, when you net them out, it doesn't look bad, but each derivative on its own, it could have create a lot of risk. Again, what do we need to know about this is disclose as much as possible about level 3. Level 3, what goes into level 3, the computation, the changes, sensitivity analysis, what information did you use. Just an overall idea what's expected to know from about fair value. What should you do now? Go to Farhat Lectures, look at additional MCQs, additional resources. That's going to help you understand fair value, the hierarchy, level 1, 2, and 3, the valuation techniques, the valuation inputs. If you're studying for your CPA exam, invest in yourself. If you're an accounting student, invest in your education. This is 20, 30, 40-year investment in your career. Good luck, study hard, and of course, stay safe.